We can see it.
Okay, good. So what I'm saying is that since we've known the procedure, how I enter trade every day, every week, 3 times in a week, from Tuesday to Wednesday, and what determines my time of entry is my central bank's dealer's range, which we call CBDR. Central bank dealer's range is the one that is going to tell you how far the market can go in a day, how long it can go, and why are the markets going that direction. I teach this in my mentorship class. So central bank is going to tell you how far the market can go in the day, how long, maybe if it is going to live a week, how long is the week going to be, how long the manipulation is going to be, and what will be the length of manipulation in the day. So if you are waiting for manipulation and you know you don't enter trade if there's no manipulation, you don't do that. The people that trade during Asian time, they need to be manipulated. Let's go to the screen back. I will show you what I'm talking about. This is our Asian time. Can you see my screen? Let me label this. Asian range. Can we all see this?
Yes, we can.
Okay.
Can see.
Yes. Let me change this color. These are CBDR. And let me change this one to another color so that we can see it. This is FVG, fair value gap. So according to what is here now, you can see my entry and from your Asian range from 17 GMT to 6 GMT is going to, when you first mark it out, you get your CBDR from here. If your CBDR is standard, is the one that will tell you how far the manipulation can go in the day. Those students in my mentorship class, they know they will not trade this, because if you are trading this, you are killing yourself. And when they are waiting for entry, they know where to wait for entry. And they know how far this can go. And they know how far this can go. If this is going like this, okay, let's say we want to, those people trading this, the reason why people are losing money in Forex, let me show you now. All this Asian range, if you are trading long, if you are trading GBP USD, can you guys hear me? Hello?
Yes, yes, we can.
Okay. Somebody is still trading GBP USD and is trading when the London banks had closed, which is 17 GMT Monday, 17 GMT Monday, which is 5 p.m. You want to trade. Then 5 p.m. is telling you is going down here. What will they do? They will enter sell because they see this one. Then what happened? It goes up again. Can you see this? Then they will be confused. It's going up. Then this one confirms it. What would they do? They will enter buy. Where would they put their stop loss? They will put it maybe here. Then what happened? You see this one is coming down again. Then they will be scared. They will be entering sell again. This one will go ranging. Then it will show as if it is going up. Then what will they do? They will know. Some people will take profit or let's wait. It will come to this place because they've sold here. They don't want to close their trade. The people that sold here, they are still in the market. They might shift their stop loss up here because this will be the place where they will shift their stop loss. When it is coming up, they will be shifting their stop loss. The people that sold here, they sold. This one will wipe up, and the stop loss that is here, it first hits. Some will widen their stop loss. When this one is coming down, they see this, no, they said this is a confirmation that is going to start selling. And it shows them that it's selling. They put their stop loss here again. Can you see manipulation here? Can you all see the manipulation? Hello, guys.
Yes, we can.
Okay. Then this one will come down. Then all this one inside your CBDR, they will say, yes, it's still going to sell. Then what happened here? Can you see this? This is where their stop loss is. It will wipe away all their stop loss. Once this has happened, then the people that enter buy here, what happened again? They will be happy. Yes, we told them that it's going to buy. Why? We are very, very right. It bought. They'll be happy. They put their stop loss here, or they break even. Then what happened again? It immediately whip up. It comes down again. Then what happened again? All their stop loss again. Their stop loss will be here, isn't it? Hello?
Yes, yes.
This is where their stop loss will be. Then what happened again? This one wipe away all their stop loss. But if you leave all this Asian range, you don't trade, you know your CBDR is standard, you are waiting for 8 o'clock to enter the trade when the bank has opened in London. You are trading London versus American currency. You are trading British currency against American currency. Then Britain opened the bank's office opened by 8 GMT. Then what will you be looking for? This is telling you, this CBDR tells you that it is standard. Your entry will be by 8 GMT. What you should be waiting for is 8 GMT. You should be looking for trade. Then what happened? 1, 2, 3, 4, 5, 6, 7, 8. At what level? At your fair value gap. Do you see this? If you enter trade here, is there anything that is going to hit you out? Hello?
No.
Did anything hit you out from here?
No.
Then what can you get throughout the day? Even if you don't get out by 10, let's say you want to leave it to run, you will get 1 to 10. Do you understand? You will ride it all these ones. See, nothing is going to disturb you. All this area, this is your trade for the day. This is your area of concentration. Then the following day, you go to your Asian range again. Let's mark the Asian range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Can you see? This 17, this is where London closed. Then can you see the candle? Can you see what happened at this 17 GMT? That shows the bank has closed. You don't have anything to do in the market again. Here, the bank has closed. You too, you should have closed. Then let's mark it. Let's mark the Asian range to 7 GMT. Everything to 6 GMT. Let's cover everything. Let me remove this. One, 2, 3, 4, 5, 6. This is 6 GMT here. Then, if anybody is buying here because they said he's going to buy, then what happened? You see, he's going to. Then let's mark our CBDR. Our CBDR is 3 forward, 5 backward. Let's mark it. Three forward, body to body. 1, 2, 3, 4, 5. If it is less than 40, we are trading by 8 GMT. Let's mark it. Okay, 45 is still in the range. But actually, I used to tell my student to go for 40, but 45 is still in the range. This is 42. We can still use 40. Do you understand? Body to body. This is the body here. This is the body here. Do you understand me? Hello?
Yes.
I'm not talking of Asian range, your CBDR. I'm talking about CBDR.
Yes.
Your CBDR, if it is 45, you can still use it. It's still standard. Maximum, but it must not exceed 45. Do you understand?
Yes, sir.
Yes. But question, sir.
Hold on. Let me finish. You will try to remember your question, okay?
Yes, sir.
I'm trying to fix some things. This is your CBDR here. This white here. Let me change it to which. This is your CBDR here. This is your Asian range, green. Then, at what price are you looking for to consider the market to trade? This order block here. Can you see this last candle here? This last candle is where you are considering as order block. So if your order block is here, let me make it lighter. If your order block is here, then at 8 a.m., you should be looking for your entry. And your CBDR is standard 1, 2, 3, 4, 5, 6, 7, 8. This is your entry, 7 or 8. But 8 a.m., let's is the best. At your 8 a.m. here, what happened? You go down and you just look for 10 pips stop loss. Please, let's mute. Please, whoever is joining us should mute your audio. So we look for 10 pips stop loss. That's how I trade. All my students, they know me for that. This is 12. We look for 10 pips. If you enter here, your stop loss will be here. Let's see if it is 10 pips. Okay, that's 9. Then from here to here, what happened? This is 1 to 12 risk reward ratio. Can you see that? The first day we got 1 to 9. The following day we got 1 to 13, or let's say 1 to 12. But if we are just looking for 1 to 5, whatever you are trading, you don't have any business to be scouting every time in the market. No, you don't need that. Know the time to trade, know when to trade, know your CBDR, everything about your CBDR, know your time zones, know every time to enter the market and time to get out. And by 17 GMT, you don't have anything to do in the market. Let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Here. If you stay more than this period, what is going to happen? When the bank has closed, then what are you doing in the market? So if you don't know what time to trade the market, you will just be disturbing yourself. Just try by error. This is the time to enter the market. You enter the market here. You enter the market here and you close here. You don't have anything to do in the market after this place. When this candle close, you don't have anything to do in the market again. Do you guys understand? Hello?
Hello, we are with you. Very well, sir.
Okay. How many days have we done now? Just 2 days, right? This is what you are trading. This is what you are trading. And does anyone, if you enter the trade here, does any candle hit you out?
No.
Okay. So you don't have any business trading all these ones because it's going to be causing a lot of disturbances. Let's see this one. 1, 2, 3, 4, 5, 6, 7. At 8 here, see what happened. Can you see this? And at what level? Here is a rejection block here. When you enter at this rejection block, just go for 10 pips up. Here. $10 pips up. I don't do more than 10 pips. That's my system. It's not that maybe, but that's what my students have been using. Let's do 10 pips there. Then what do we have here? From here to here, we have 14. Let's say we even go for 10. And 10, we got 10 around this place. And at what time should we be getting out? Let's see when to get out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. At the close of this candle or here, let's say you've gotten 10, but at 17 GMT, you don't have anything to do in the market again. You don't have any business in the market again. This is our entry here, and this is 17, close of 17. You don't have anything to do in the market again. So all this area is what you trade. It now depends on you, but this is how I do my trading every day. I trade Tuesday here, Wednesday here, and Thursday. Then, do you now see how easy it is to be trading? This is just this last week. Can you see that? Hello?
Yes, we are with you.
Yes, this is just last week. So there are lots of things I consider in the market, which I train my students about. My CBDR, there are lots to do about CBDR. Like this week, all my students knows how far it can go. All my students. Some of my students can trade from here to this place. If you know CBDR very well, you can get this first and get this second. All my students knows how to catch this. When they see manipulation like this, they know how to catch it. They know how far it can go and where it's going to get back to. And they know that, okay, we are selling. They can still buy from here to this. But if you don't know all the secret of CBDR, stay away from it. Just get this. You are okay with this. One, the first day you get 9%. Second day you get like 10 to 13%. The third day you get like 14%. What are you looking for? In a week, you've gotten almost 30%. Then what else are you looking for? Trading is fun if you can play according to the rule. So somebody was wanted to ask question the other time. So what is your...
Okay, thank you, sir. My question is the CBDR, sir.
Yes.
You are between 40 to 45. Now, maybe I missed the earlier part where you defined that. Now, I wanted to explain more clearly, sir. 40 to 45, is that in terms of point or time, or what's the factor of instances of measurement there, sir?
Okay. You know what we call pips?
Pips, okay, sir. Yeah.
If your CBDR is between 40 to 45, maximum 45, standard deviation.
Okay.
So you can enter your trade by 8 a.m. That's the safest time where you are 100% sure that you are going to get a good trade.
Standard deviation.
Yes.
Okay. From the is it from the last candle of the previous day?
You know Asian, how to mark your Asian range?
Yes, from 17 GMT of the previous day to 7 or to like
To
6
GMT. To 6 GMT.
of the present day.
Yes. Your CBDR be your 3 from your 3 GMT backward. No, you are going to be, it's going to be 18, 19, 20, from 20 GMT to 3 GMT.
GMT.
Well, what I do is I count 3 GMT forward. I count 1, 2, 3, 4, 5. 5 candles backward, 3 candles forward.
So that makes eight candles.
Yes.
You know,
Candle forward, we have 3 GMT. Then this one, we count 5 forward, which is backward, 19 GMT.
yes, sir.
Do you now understand?
Yes, sir.
Okay. So when you now measure it, and it is less than 45, you are good to go. That means 8 GMT, you are going to get your highest of the day or lowest of the day to trade. Which the safest time to get out of the market is 11, at times it is 10:59. If you want to be going for 1 to 5 or 1 to 4.
Yes.
The safest time. Here is 8 GMT, 9 GMT, 10 GMT. All these ones. Because at 11 to 12, there's break.
Yes.
Yes, there's London break. So if you don't want to, and if there's going to be news to affect the white part, please let's by 11 GMT, anything can happen. That's what happened here. 11 GMT, it can go up, and whatever you are doing here, it can, if there's going to be news, it can read it up. But the best time, if you want to be safe in the market, let's say you don't want to be holding it for long, or you know there's news. If there's news, you check the news. What time is the news going to come out? Like this day, I think there's news. That's why it's like this. But when there's no news, the thing will be smooth like this. It will be smooth like this. But what happened here? 8, 9, 10, 11 here. By 12 is going back up. But if you can hold it, that is if you have the mind. But like me, I would rather first of all get this first. That is 8, 9, 10. This 11, as soon as